For decades, private markets were an exclusive club for the ultra-wealthy. But now a rush of retail investors is flooding in seeking high returns. This democratization is sounding alarms for institutional backers like pension funds. They warn of a lack of transparency and fear bigger issues down the road. While new investors face risks in private markets, the wealthiest Americans face their own vulnerability. A new report shows the richest are more reliant on the stock market than ever before. This so-called wealth effect is propping up the economy, but it creates a massive risk. Any significant market downturn could have a cascading impact on spending and investment. Beyond market volatility, political decisions are now directly hitting the economy. In the fallout of a government shutdown, the Energy Department has axed billions in funding. The canceled green energy projects were located in 16 states, won by Kamala Harris. This move is seen by many as politically motivated, jeopardizing climate goals and jobs. That political pressure is also being felt in Silicon Valley. Apple has removed apps from its store that were used to track ICE immigration raids. The decision came after significant pressure from the Trump administration's Attorney General. This highlights the ongoing battle between tech platforms and government influence. And it's not just software under scrutiny. Big tech's hardware is facing federal investigation. E-commerce giant Amazon is in the hot seat after 2 of its delivery drones crashed. The drones reportedly flew into a crane in Arizona, sustaining substantial damage. Now both the FAA and the NTSB have launched a probe into the incident. The crashes raise serious safety questions about the future of automated drone delivery.